Hello, traders. Today is Sunday, July 20th, and this is my full top-down analysis on gold, which means we're going to be starting on the monthly time frame, working our way all the way down to the 1 hour time frame. And I honestly don't think it matters, even if you are trading on like the 1 minute, 5 minute time frame, the full top-down analysis is important to everybody trading on all time frames. So anyways, on the monthly, I actually think that gold is extremely clear on the very high time frames like the monthly, weekly, daily. First of all, we have impulsive up, wave one. We have an ABC correction, which is an expanding ABC, wave two. Then we very clearly have a one and a two of three. This right here is all one wave, so we have a one, two, three of three. More than likely, we are now in a wave four, and we need to make a wave five just to finish off this wave three trend. Then we're going to have to make a much bigger pullback for the wave four that would match this wave two back here. So the pullback that we're currently in should be matching this pullback right here in time and price. This pullback was 1, 2, 3, 4, 5 months. So we would expect this pullback to be roughly 5 months long. So anyways, going down to the weekly time frame. So we have been especially on the higher time frames, very overlapping on this. I do think that we are already in this wave four. I think this is a WXY, which is going to be clearer to see on the daily time frame. I would also expect this WXY to probably go down at least to the 38% of the wave three itself. So, that puts us down below the $3,000 area if that is the case. Going down to the daily time frame, I mean, we've been very overlapping lately, but I do think there is a lot of clarity on the daily. I think this is 1, 2, 3 waves down for W. I think this is 1, 2, 3 waves up for X. I think this is 1, 2, 3 waves down for Y. And potentially this wave Y, like I said, could put us down to about the 38% Fibonacci, which I think could possibly put us down below the $3,000 area. I think right now we are in the wave B of wave Y. It looked like the wave B of wave Y was already over at one point, but it definitely did not start an impulsive move to the downside yet. It is extremely overlapping, which means the wave B is very likely not over, and it probably is going to go up and grab some liquidity from these highs, maybe the 78% Fibonacci retracement, likely before it actually starts the big move to the downside that we've all been waiting for. So going down to the 4 hour time frame, like I said, very overlapping patterns, very overlapping waves. When you see very overlapping waves like this, then you are very likely still in a correction, which in this case is a wave B correction. Most likely this wave B is going to go back up and take out some of these liquidities and maybe even push up to the 78%. So technically we probably should be looking for longs. Going down to the 1 hour time frame is where I got my Fibonacci retracement on just the last impulsive move up. Because if the gold is really pushing up to one of those higher levels, then this move down right here would potentially only be a pullback to this last wave up. That means that likely this move down would go right to a Fibonacci retracement level, maybe in some sort of a three-way pattern like this, then make an engulfing move to the upside, then end up continuing up like I showed on the 4 hour and daily time frame. So that's definitely what I'm leaning towards. I'm leaning towards the fact that it's probably going to go up and grab all these highs, maybe even hit that 78% Fibonacci retracement from the daily time frame before we start that big downtrend. So, it could potentially be a couple weeks before that big downtrend actually starts. So, anyways, don't forget to check out my free Discord channel, linked down here in the corner. Take a look at my website, fxpipcollector.com. And as always, thank you for watching and happy trading.